we're reviewing the 30 best momentum companies over the last quarter and the 30 best companies on the launchpad. That's where they've had the best weekly improvement in their momentum. Gary Glover's been through both lists and pulled out his favourite charts for us to learn, look for trading opportunities and study. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
We've got this list. It's been a bit of a change because the market dynamics have been falling, a bit of a rounding corner, and you've been through the two lists. If you look at the list, I'm sure you've got some insights. So what's standing out to you, the markets, what's happening, what's coming to mind?
Look, we've sort of got, obviously we've got like uranium on fire, which I think, we and I sort of talked about maybe 5 or 6 weeks ago. That hit the launch pad there quite, the whole sector, large parts of the sector are in the launch pad, and then we've sort of kicked on since then. So we did have a bit of a move there, and there's some good technical patterns in there. So that's definitely one of the things on the list. Obviously, some of the golds are sort of starting to hit the list as well here, which is sort of something which hit the launch pad maybe only a week or two ago. There's just still a few, might be 1 or 2 lithium names in there, some sort of small ones, and some sort of, might be maybe an energy stock or 2 in there. But other than that, sort of, that's probably the majority of the list there, really. The weekly list is probably a little mixed this week, sort of, but maybe being a bit of a negative week and a bit choppy out there. So that's probably indicative of where we're going. But there's a few interesting things happening there. Say like uranium's been absolutely on fire. So, what's number? I don't want to sort of skip ahead here, but EL8 on this number 4 chain there. The uranium there sort of obviously come out of that long consolidation there, a little bit of a VCP sort of, August, and then broke there, and then you're breaking swing highs there, breaking your B waves, and look at the volume, big volume of the small volume on the pullbacks, small volume, big volume on the up days, small volume. It's still popping up there. So I think EL8 on the list, and then Bannerman there was actually one that I traded. These I could have consolidated a few times and popped again, and then consolidated again and then popped again here. So probably getting a bit long in the tooth here now, but still haven't sort of seen too much signs of sort of selling in there. So I think Deep Yellow was another one I think traded there. Obviously Paladin's had a pretty good move as well. I think on the list we've got I think AGP is on the list as well. It's had a really went for a small player there. It's had a pretty fiery sort of move here. So the only thing to be careful of here is when you start to see the biggest volume. So I think I saw a couple of them had some really big volume. So when you sort of run, and all of a sudden you get a pop with this big volume there, that can be, everyone thinks, it's kind of bullish, but for every buy there's going to be an equal seller on the other side. So that's all of a sudden when you see those big exhausted, that can sort of kill a really, a bull trend there. So it can just sort of bring a bit of a stop in as well. So just a bit of a spike there on big spike as well. So they can just, when you see the biggest volume, sort of day here, that can
closing on the high. They're closing significantly off the high.
Yeah, it can just close off with it. It can just be when you see the big spike in volume there. That can be just like you want to see that volume coming early, and it's all obviously seeing how the counter move comes here. But sometimes when you see the biggest volume spike of the whole move, so as we just say, this has been running here for good 45 days, almost 50 days here now. So it's been running for a bit. So I know they can run longer here, but when I see the big volume spike, quite a few of them had that probably the biggest volume day of the whole move. That can be like a sign of exhaustion. That doesn't mean it's the top here. What it might be, just might be a period or a place where the market has a consolidation. So just if I was trading that, because I think I traded Bannerman into just what might have been the 221 or something like 215 or something like, so I didn't sort of trade it just because it had that sort of 5 sharp days up here. And I know sort of, Kalamagi talks about basically trading at least a third or a half into 3 to 5 days of strength, then come back in. My problem was I'd then come back in. So we had the consolidation there at the right level. And then, then we had the low volume, and then we had the volume go again. So we could have come back in again here. There was a few of those were the same as well. I think EL8 was sort of one that I did see here. This was, I think, might have been, around just, for me breaking that B wave would have been good there, around 35 cents there. So I did, there was some good volume through there. There was nothing wrong with there. I just, at the time there, I had a couple other positions, and I thought, oh, should I really have 3 positions, all in the one sort of sector? So just from a risk point of view, but there was nothing wrong with the chart here. I mean, even that sort of good volume, 3 big days here, to talk about those, chunky, when you see the big 3 days up and then you see the consolidation, like 3 days of consolidation against those 3. So, that's, talking about, a million and, close to 2 million. So it's done 4 million traded, and then it has 3 days spread of 337, 390. So it doesn't even trade less. Yeah, so you probably only 25% of the volume has come off in those 3 days compared to the 3 previous. That's why you got to look at it, what's relative, what happened beforehand. So, and then we go pop again on strong volume. 1, 2, 3, we're big volume again, and then we consolidate again on lighter volume. So far less selling. So these are the type of things you sort of got to look for when they start to move there. So those are probably interesting ones there. I think SXG, Southern Cross Gold. So we're starting to see a few gold stocks sort of showing a bit of strength here, Chris. So obviously this is a sort of smaller one now. I think the momentum score is 35, pretty decent. But it has obviously popped up here, but it has sort of pulled back here now on this sort of lighter volume. So that's kind of interesting. ARV was on the list as well. Now that's got a pretty nice run into some good volume. So there's that. How's that? So there's that. Yeah. So there's that sort of. That's what I'm referring to. Sometimes they run rather than get the spike here. So that doesn't mean that's the high here, but it does mean that it can be a point where it pauses there. So, if I was long that, I saw that big spike of volume into that. It should be sort of, this is the Mark Minervini sort of, Kalamagi style. It should be, I think Minervini's are, he's at least a sort of quarter to a third. Whereas I know Kalamagi's sort of a third to 50%, but the Kalamagi's a bit more aggressive. He's sort of in and out. So Kalamagi's got a higher failure rate in his trading, but when he wins big, So, but yeah, and then it's pulled back, and he can sort of, can basically sort of load up again. So this doesn't look too bad here. It's actually sort of come back. The sector which is getting a bit of strength there, yeah, so that looks pretty decent. What else was on there? IPX. This is nice BCP in here, Chris, and then we did break the B wave there, sort of come back, so a bit more volume in there, and then you sort of almost got your little cup and handle in here, and then we'll get our volume pushing through. That's sort of gone on since then, so not a bad little pattern as well. I think CU6. Yeah. Well, these are really interesting patterns here, because if you look at I just sort of scroll out here, you can see obviously this is impulsive, corrective, impulsive, and this is a long war, corrective declining. So it's basically spent a lot of time here. So when we see these patterns there where the market pulls back, with this whole thing is overlapping, so it doesn't sit on top or below. It all the highs and lows overlap there, and then eventually you break out of this trend here. So this is just sort of, breaking out, what I call a little B-wave break here, and that builds from there, and it goes up a little bit, still pretty light volume, but it's sort of finally sort of broken out of this consolidation there, broken up here. Then you just do this really tight consolidation, and then away we go again. It might have been 1 day of selling in there, but other than that, there wasn't too much sort of selling in here, and then we've gone again. So that long consolidation is definitely a pattern to sort of keep an eye on. I think BOE, which is again on that sort of energy. So again, there's that sort of long consolidation. Again, it's a sideways sort of overlapping trend here. This is sort of goes back to my McLaren days there. I mean, really, the whole thing, that's the previous high. So the whole thing just sat on top of that whole time. So that's a perfect setup, really. Just a sideways sort of grind, price tightening up. Even sort of Kalamagi, Minervini talk about the VCP. Kalamagi looks for these sort of consolidation, price tighten up, and then looking for a little break here. So even just waiting for the B waves there. But that was a pretty good volume day. So look at all that tight, all the tight price action there, nice and tight, and then we get a little pop, and then away we go.
Did it help that it was sitting on near that previous high from the main?
Oh, yeah, adds to it 100%, and you can see the good volume through there as well. So healthy volume moving up, sideways consolidation there. This is what we got to look for. This is sort of like I watched a sort of Kalamagi video the last couple of days. Actually, they're just someone explaining his trades and techniques. I looks for it. It's just repetitive. It's just the same thing over and over again. It's this tight consolidation. He wants to see the tightness and then coming out there. So sometimes there'll be really strong stocks that might consolidate above the 10-day, or maybe they consolidate above the 20-day, but they're really, the tightest sort of stocks there. But you're really looking for this sort of tightness and then sort of the break here. So you are looking for that, that little B1 break there. So just thought those are two, the CU6 and the BOE, just a really good sort of setup there, explanation sort of as to what we're sort of looking for. For me, it's sort of, sometimes we get a little bit frustrating. It can be it's a pretty choppy market out there. It's not the easiest market to trade on it. You just got to wait patiently for these good trades there. Thought I would sort of chat on my inner Inky Johnson. I don't know if you know Inky Johnson, but he's a sort of a motivational speaker. They had a bit of a sporting accident, which sort of changed his NFL dreams, and then became a motivational speaker. But he's got an interesting sort of he's got a lot of interesting quotes and a lot of interesting sort of speeches that he makes. But I was listening to one yesterday about there's two wolves inside everyone. There's the evil, the wolves, sort of angry, jealous, greedy, resentment, inferiority, lies, ego. And then there's a good wolf within us, the sort of the joy, peace, love, hope, humility, kindness, empathy, sort of true, and it made me think about, as a trader, when we're trading, we are fighting sort of these two wolves or these two traders within us. We've got this sort of positive trader, disciplined, patient, calm, committed, confident, sort of happy, just considered, sort of, and then you've got this, the other trader which can sort of sneak in is the negative, undisciplined, on edge. You get, angry, inconsistent, maybe anxious at times, greedy, impulsive. So we've got these sort of two traders within us in that. And Inky Johnson says, which person wins? Is it the evil or the good, or is it the positive or the negative trader? And it's the one that we feed. We become what we feed. So made me sort of think, it's a really good analogy, and it's so many sort of so many truths in actually what he's sort of saying there about human nature is that we do have these sort of two forces fighting within us all the time. So we've got to keep feeding the positive, and we got to keep telling ourselves to be patient. Got to keep reading. Just got to keep affirmations, sort of following your rules, your process. It's just got to keep keep the wolf on the good side, keep the positive trader. Keep feeding him. Do not feed the negative, upset, anxious, impulsive, inconsistent trader.
Don't feed that one. Don't feed it.
Don't feed that one. So we've sort of, and it will. Those sort of good times will feed. And I mean, look, it's a period of the market right now. It's probably, I think in the last probably 2 years, it's probably the toughest quarter I think I've seen in the last 2.5 years. So it's been a pretty choppy sort of market here, where you're sort of maybe getting a bit ripped up and, sort of, but if you just sort of stay true to your process, stay sort of positive and disciplined and patient, you just got to keep feeding that sort of side. You just got to keep, if you sort of understand your process, you understand that you're going to have periods there where you'll make a lot of money, other periods you'll get chopped up there. That is just sort of part of the process. So you've actually just got to accept that, own it, almost sort of Mark Douglas sort of, just come to sort of, be sort of calm and, considered about that. That's just part of the game. You've just got to accept the good and the bad. It's, you just got to keep doing what you're doing. And, if you get anxious and angry and you're on edge, you'll want to change, you'll go away from everything that you just spent the last few years not building, which, will stand up when you get the right conditions in market there. You just have to persevere through that cycle there. So I thought that was my, just something I've been listening to the last couple of days. It sort of made me think about trading, and I think it's a good analogy there.
Hitting the choppy market.
Yes, yeah. It can be a little bit frustrating as well. So, but that's part of trading as well. So we have to sort of come to accept that, the good and bad there. Everyone else will be probably, a lot of people will be losing money here, or going backwards there. So if you can sort of grind it out and at least sort of keep your, retain all 100% of your capital, even though you might think you're moving forward there, that can be, it leaves you in a sort of strong position. As you think about a market drawdown, markets can have big pullbacks, and most people, traders, investors, they'll end up, drawing down a 10, 20. I mean, a big market drawdown. I've seen plenty of investors have a 40, 50% drawdown because they're usually trading some of the high beta stuff. They don't stop themselves out. Market has a 30, 40% decline, and then they've won a large part of that because they haven't shown any risk management there. So, if you can avoid that, you minimize your losses when the market has these drawdowns and pullbacks. Means that sort of you're in a position to, climb forward. If you lose half your capital, then you've now got to basically sort of get double the gain to get back to where you were. So, so it makes it tougher there. That's why risk management is so important. Now, looking at the weekly list there, so I saw number one, which actually CEL, which is another gold stock here, Chris. So Challenger Gold, so a bit of a small one there. Some okay volume through there. Probably maybe a little small for me, but do like what I saw there. Kind of saw some bit of volume down the low there, a little bit of exhaustive there. Did sort of dry up as it hit the low. Saw, there's 2 or 3 bigger, heavier days in there, so that's sort of interesting. Thought that looked all right. Silex was sort of one to keep an eye on there. This might be a little possible BCP in there. Probably these are a little more volatile than you'd like to see. You'd like to sort of see it. We saw one here, which sort of failed here. You prefer to sort of see this a little tighter in here, not moving around as much. But still got to keep an eye out. RR1. A bit small again here, but we do have a VCP in here, Chris, and we've got all the right characteristics. We've actually had some pretty good volume on the way up here. Volume dried up on the pullback. Saw some pretty good volume again on the way up again. Sort of dry up a little bit there. Sort of one volume day, which is sort of at the low, which we sort of like to see. Pull back here again. Bit of volume at the low again. We have sort of risen up here. Not great volume here so far, but probably just one to keep an eye on. Maybe it might sort of tighten up a bit more. A little small, so it does make it a little difficult. A11, sort of one that I'm sort of keeping an eye on there. Sort of, it is still in a downtrend there. Still hasn't broken a swing high there, but it has now gotten above the 50. Has sort of broken above this little swing high there. So possible change of character. Got a few volume days in there. Pretty tight consolidation here so far. So this is one that maybe is sort of shifting. Maybe a bit early, a little bit of risk there, but not too bad. EIQ was sort of one again, that whole tightening in there. Some okay volume too on this leg here, up here, and then tightened up here. Then we saw no volume through here, and then we sort of had a bit of a pop on volume here as well. So this whole thing's, again, a bit small, but we do have the tightening up VCP in there. Just one to sort of keep an eye on. IHL had a bit of a pop here. Still, probably this one is still a strong downtrend. The only thing I sort of saw on here is there's 3 decent days up here, and then we've had lighter volume on the way down here, but still sort of in a pretty strong downtrend. So maybe some early signs of accumulation starting to occur, but still a very, very strong downtrend. We want to basically be sort of seeing a change of character first before we can, and we want to be breaking up above a high before we want to get involved in it. It's been plenty of these can occur, and they can just keep going lower. You've got to be patiently sort of wait for the break there. Thought League Market Services is interesting there, sort of, again, pretty decent downtrend there. It's come back quite a bit. This is the old, for me, the old Peter Lynch for me. I mean, personally, having dealt with all the different share registers over the year, the Link is easily the worst to deal with.
I have to agree with that.
So there's so it makes great sense to me that the share price is high because they just haven't got it together. But look, at the end of the day, we're starting to see a bit of volume down here. It's always been a bit of a target here. Potentially could be. Look, this thing could be taken over and automated, and probably get good value for it. But that's not the best register out there. But just some interesting price action there. Just got maybe a possible change of character, just breaking above here, but still pretty early. But definitely not a leader. Definitely a laggard. Definitely doesn't fit the Peter Lynch model. He wouldn't touch it. FCL, Genius. I just noticed this one's just sort of pulled back in, just sort of tightening up here. Some volumes there, but we're still a little bit of a downtrend there. You want to sort of see at least a little bit of a B-weight break here first. That was sort of it. There wasn't sort of too much sort of jumping out there. I noticed there was a couple of golds on both lists there, but we're sort of seeing it's pretty interesting gold, Chris, because we highlighted gold producers there a couple of weeks ago. They sort of came onto the list, onto the launch pad. And there's probably 4 or 5 sort of stocks came in that week. We know sort of when we get a chunky sort of one sector hit the launch pad, that has often resonated in that group being a leader later on. I know I'm sort of keep referring to uranium, but there's plenty of other examples in the past of that. Like lithium, I've done that a few times in the past as well. But the gold sector is really interesting here. I mean, WGX, that's gone to a new high here, Chris. So showing pretty strong. That's a little, a little, divers breakout there, sort of breaking into the 52-week highs there. And the volume is still pretty steady through here, pretty decent. So that's a good sign there. I mean, if you look actually at spot gold, it's actually been going down here. So the whole thing's, this is sort of pulled back here. So this is almost a VCP as well on the gold here. This is, the whole thing's sort of tightening up here. So it is going down here, but it's not going down with gusto. It's overlapping here. So it's quite corrective here so far. So it's just interesting, the whole thing sort of tightening up here under the high. We sort of started to see a lot of stocks to launchpad come through there. Around those evolution yesterday. Again, there's our first pullback, second pullback, third pullback. There's a nice VCP pattern there again, Chris, on evolution. I know it's a bit bigger. Sometimes the smaller ones are more effective here, but some good volume through here. So I thought this looks pretty interesting as well. So showing, relative strength versus sector too. So if you look at WGX, obviously evolution, they're looking pretty firm here, as opposed, I think Ramelius was the other one that looks pretty strong. But if you look at other stocks, maybe something like the Silver Lake sort of down the bottom there, I think, Regis is sort of down the bottom as well. Even like Northern Star down the bottom here. But these have all come back here and they're all sort of starting to build. Some volume sort of coming in there. Notice that Regis there. That's just a little inverse head and shoulders in there. But now we've got a little a little BCP in there as well, a little tightening again, starting to break out here. So starting to see some interesting signs. Like I saw a video yesterday from James Flanagan, who's a GAN guy. He's talking about gold, the 60-year and the 90-year cycle, potentially having a big move here. If we look at the sort of 70s, like at the moment, everyone's talking about small caps. Why are small caps underperforming? Whereas if we go back and look at high inflationary environments in the past, they've always underperformed in a high inflationary environment. So we get it, anyone goes back and look at our sort of 70s, they'll see that the small caps were the worst performing sectors throughout the whole circle. The whole 70s, like eight to 10 years, small caps underperformed. The big performance, what we know, were energy, precious metals, and value shares. And value shares, obviously, if you're going to go sideways for a while, your value share will pay you your 4 to 6% yield, and then if you get an A, I think value share averaged around 9.5% throughout the 70s. So you got 4 or 5% yield, you might have picked up another 4 or 5% movement in the share price, so a bit of a slow grind. And if you think about the market at the moment, what's the market been doing the last few years? So they've been going sideways. Energy's on fire. Value shares are just going sideways, dropping up and down, getting paid a yield. Small caps are underperforming. The only thing which really hasn't followed the blueprint is precious metals. Precious metals, I mean, they've had we had a few, okay moves in here, but haven't had a big move like energy. And obviously uranium's obviously moving here recently. So gold really is pretty interesting to me. It's sort of like, it's a sector really worth watching there. So we've hit the launch pad the last couple of weeks. We're starting to see some sort of stocks there. And the amazing thing there is just that, gold's actually been going down here. I know that obviously Aussie dollar terms, because obviously the Aussie dollar's been going lower. That's obviously good so that, these Aussie gold producers make some cheaper and stuff there. But yeah, the actual company, the shares are actually starting to look pretty interesting to me. So I've sort of started to add a few little names in there. Definitely one I'll probably keep definitely close an eye on there as well. I just think it looks pretty interesting to me. So that's definitely one sector to have a close look at.
Well, it's something, when we were trading this with gold, it would have been 6 to 8 years ago, and really splitting the market between those with domestic operations and those with heavily international operations, because the gold price is one thing, it's priced in US dollars, but if your labour costs are external to the Aussie dollar, so they're offshore and the dollar's tanking, then that becomes more relative, and the domestic gold miners who are sort of insulated because of the falling dollar, their revenue was increasing, but their labour costs were sort of in the same currency. They ended up having a better earnings reporting season as a function of the dollar and where their costs were domiciled. So that can be a big defining factor in between trading a leading gold stock and a lagging gold stock. So it'd be interesting with all the ones that you went through, if you went back and said, okay, where are their earnings coming from, or where are their tenements and what are they exposed to? Where are their risks on the FX side? That's just, I remember there being the defining factor after about 4 or 5 months of gold rallying, and looking at Newcrest and a few other ones that were just still down, and these smaller Aussie ones were just absolutely shooting the lights out.
Yeah. But just, it's amazing here that if you look at the, spot gold has really been contracting. I know it's not really falling away here. It's more of a sort of sideways sort of grind here, but the shares are all actually been building here in the face of sort of maybe a negative spot price. And I've always found as a trader here, having traded over the years there, is that I find this and I find this actually the same for oil as well, is that the stocks will tend to move before the commodity
itself.
So you'll start to, you'll either see the stocks start to roll off if you peaked, and then all of a sudden the commodity will follow, or you'll start to see the gold and oil stocks start to show strength, start to build before the commodity actually starts to kick up here. So it is interesting here that we've got a really, little VCP sort of tightening pattern there, ingesting sort of under the high in some regards. At this stage, it's still negative, that chart, really, the spot gold here, but all the gold stocks are actually showing a bit of strength here. So Even like, Northern Star is obviously probably one of the stronger ones here. That's now sort of, okay, so it's gone back to the 50 here now. So, it's sort of, pulled back here, made a first higher low, just a little bit of a rise, come back. So might call that little B wave break here maybe today here. So volumes are quite light here still. But we've sort of seen here when they've sort of, broken a little swing high in there. I've often sort of built from there. So it's just really an interesting sort of sector here at the moment. So I know James Flanagan, the GAN guy, he's got a history of sort of being a bit early. That's actually what worried me. He was sort of calling it. Normally he's like 2 weeks or a month early. So, but it was just interesting here. It's obviously if you put all the pieces together, it kind of makes sense. But we'll see. This market hasn't always made sense in the last year. So, we're definitely going to apply some risk here, but definitely some interesting signs there.
Oh, there definitely are. So it's good insights to be pulling apart the momentum leaders over the quarter. Those sort of changed this week, and then putting the two together with your analysis to see, well, hang on a second, there's a thematic change going on here. We've seen this movie before. Quite often it leads to, as you're saying, launchpad, a couple of weeks later, like Uranium did, and it's the momentum leaders that we're seeing now. So they're very valuable insights, and we say thank you very much for sharing them with us, Gary Glover from Novus Capital.
Sort of finish with a quick soccer quote. This one, so sort of I was reading about a funny anecdote. Beckham, he basically gave himself a haircut there where he had a mohawk, and
I remember it was the World Cup in 03.
So he didn't. He gave himself a mohawk, but he went to training there and wore a cap or a beanie, and didn't show his haircut. And then game day, obviously playing for Manchester United, basically had the haircut, ready to go. And Alex Ferguson said, "No, get back in there and shave that off." But I got a quote from Ferguson around that, which was, once you bid farewell to high standards and discipline, you say goodbye to success. And that was Sir Alex Ferguson quote there. That obviously, now we individualise players a bit more, but in the old days, they're, keeping all the players to a certain high level, high standard. There was all around his success principles. So thought I'd finish there.
Oh, that's a good finishing note. We'll take that into the weekend, and we'll come back again on Tuesday for your report, which will have a whole playlist on the right-hand side there. And then also Gary's other playlist, he's talked about different cycles, and then also the inflation reports, the 40s, the 70s, and breaking down the leading sectors, who was leading, who was lagging. That's all on the right. And the left-hand side is his X or his old Twitter handle if you want to follow him there. Stop recording.